Welcome back, and joining us now for today's market read is Imtiaz Suliman from Vunani Senti Fund Managers. Imtiaz, thank you so much for your time this evening. So, US President suffering a loss on Friday after the Supreme Court ruled out his liberation tariffs. But he isn't letting up, right? Retaliating with global tariff threats of about 15%. What does this move mean? Is the 30% tariff on SA imports off the table? There's also just been a lot of volatility on the back of this because of the uncertainty and everyone trying to make sense of it.
Yeah, thanks, Charlie. I think what we're seeing is, the weekend was dominated by lawyers and not economists. So once those tariffs were struck down by the Supreme Court, the president came out very quickly to say that there's a global baseline tariff of 10%, and then he upped it to 15%. And what this means for existing trade deals, I think needs more clarity.
Yeah.
But if you look at, the various regions, the likes of China and some of the Asian countries, their effective tariff does reduce because they were at a much higher level. So they will be celebrating somewhat. We did see a bit of a relief rally in the Hong Kong market, which was open today. This Chinese market is still closed for the New Year celebrations. And I think, we will see the effective tariff and what it means for the various countries unfold over the next few days and weeks from here.
So we are just seeing that uncertainty playing out in markets today.
Yeah, definitely. And I think what is certainly clear is that the uncertainty and the geopolitical tensions remain very high. And on the back of that, we're seeing the demand for real assets, especially gold and PGMs, continue. So gold was very strong today, reaching almost $5,200. We've seen similar strength in silver and some of the platinum counters as well. And on the back of that, you saw the resource complex really quite significantly lifting our market during the day.
Yeah, that of course really boding well for our local market. Let's take a look at some company news out today. A tough macroeconomic environment weighing on Sasol Imtiaz, with earnings plunging on lower oil and chemical prices, as well as a stronger rand. How do you think the company fared on an operational front, right? We did see volumes improving. We did see the mining unit also doing well. Talk to me about that.
Yeah. So from Sasol's perspective, they've been trying to stabilize their production volumes. And essentially, this was the commissioning of the destoning project at the Secunda plant. And what that would have allowed them to do is sort of bring more efficiency into the system and higher production on the back of that. So we did see some of that coming through, whereby production volumes were much more stable in this period. They did also lower their capex guidance overall for the period, which means that free cash flow was a bit more positive. On the flip side, the chemicals business remains challenged, and that's on the back of general uncertainty from a macroeconomic environment, lower prices, and also a shutdown at their plant in the US. So we did see Sasol lower their guidance for the chemical unit for the full year period. I think overall, if you look at their balance sheet, debt is sort of stable at $3.8 billion. But for them to start paying dividends, they need to get that debt level down sustainably to below $3 billion. So I think still some time before Sasol starts paying a dividend, although they're very much dependent on the oil price. So if oil prices go up and remain above 80, that will bode very well for Sasol. But if we do see a fall off in that oil price to around $50, then that would put them in a position which would again bring their debt levels into concern.
And quite surprising to see that it managed to eke out some gains by the close of trade that could possibly be on the back of the upbeat market we are seeing today. Let's look at Spar, right? A company a share price that's been bleeding since last week. Last week we heard of the CEO, Angelo Swartz, resigning. Today we got a trading update that didn't look good, right? We saw the top line growing, but margins really squeezed due to promotional activity over that period. I can also imagine that softer inflation and the ability to pass prices to consumers while staying competitive is also weighing on that counter, Imtiaz.
Yeah, that's exactly it. We're in a very competitive environment in the food space in particular. We've seen, the big competitor in that space, ShopRite, really growing, and they growing more than 2 times than what the market is growing. And on the back of that, as you mentioned, food inflation has been quite muted. So food inflation in Spar's instance was 2.6%. ShopRite was at 0.7%. And the official food price inflation is at 4.6%. So what that tells a story of is that it's very competitive. Everyone is trying to gain market share and spend from the consumer's wallet. And Spar and Pick n Pay are really not in a position
Yeah.
to give up any margin. So ShopRite has a big buffer in terms of the margin that they generate, but their competitors like a Spar are a bit more challenged. The one thing is that the KZN and DC tried to implement SAP, and that didn't work out. So they had to roll back that implementation. But what it did bring about was a lot of franchisees that sort of bought elsewhere and outside of the SPA system. And that loyalty for the KZN franchisees dropped off to around 71%.
Yeah.
And that is a big headwind for SPA because they need the volumes to go through the DCs in terms of generating the profits, as a lot of their costs are pretty much fixed.
Yeah, that SAP issue has been a headache for Spar for some years now, and I'm wondering whether new leadership, even though from inside the group, will be able to steer the company into greater success moving forward. All right, let's get your stock pick. Where are you seeing value at the moment?
Yeah, so I'm going for Bidcorp. Bidcorp is a food services player. They've come under quite a bit of pressure in the last while, I think on the back of lower food inflation, as we've been talking about. But if you look at the model that Bidcorp employs, it's very much in terms of running a federated model in 35 countries that they are represented in. They're in Australasia, they're in Europe, and they're in emerging markets. What they do is provide ingredients to the food industry in terms of fresh and dry ingredients. And it's a very fragmented market. So from time to time, Bidcorp does do bolt-on acquisitions, and those acquisitions add to the scale and product offering that the likes of a Bidcorp can offer to their customers. So I think from a overall perspective, you've got a stable business that is growing top line, whilst not double digits, but steady top line growth. And on the back of that, you should see margins increase. And that translates into high single-digit earnings growth, which is very much commendable in this environment, and for a counter that produces good return on equities and a very good dividend yield overall.
We'll have to leave it there, Imtiaz. Thank you so much for your time and sharing your insights on markets action this evening. That was Imtiaz Suliman from Vunani Senti Fund Managers.